we look for passion, we look for hunger, we look for vision, we look for audaciousness, we look for uniqueness of the product market fit, amongst other things, and a high degree of integrity. The quality of the entrepreneur is absolutely important. The quality of the entrepreneur from his vision, his ability to execute, his ability to hire people which are better than him, delegate, the product market fit.
Welcome to this episode of Sustainability Karma. I'm your host, Rajiv Tikoo. Today, we have a very special guest with us, Sudhir Sethi. He's founder and chairman of Chiratae Ventures India Advisors. The firm is advising AUM of $1.3 billion. They have invested in more than 130 companies. They have exited 60 plus companies. They have taken 3 companies public and they have funded 9 unicorns. They have also backed 15 market leaders. Welcome, Sudhir Sethi, to this episode of Sustainability Karma.
Thank you, Rajiv.
Sudhir, I would like to begin straight away with the genesis behind your name, which you changed midway.
So when we formed the firm in 2006, it was called IDG Ventures. Mm-hmm. And the reason was because our anchor investor was IDG. Mm-hmm. And subsequently, the founder of IDG, Pat McGowan, about 10 years back, passed away. At that point, we had a need to change the name to a new name. And we were looking for something. We consulted our advisors, specifically Mr. Tata, Bruno Rochelle, Chris Gopalakrishnan, and Manish Choksi. And at least from the Mr. Tata and Chris, Manish, the consensus was that we should have an Indian name and not a foreign name. And the reason was that there are very few firms from India who were growing as venture capitalists firms, and we would have stood out in our effort there. And that's what happened. After some search, we homed in onto a hurrah moment which said, let's keep a word called Chiratae, which is a Kannada word for the wild leopard, because a few of us are wildlife photographers. It's as simple as that.
You have interacted with all global visionaries, ranging from Mr. Ratan Tata to Indra Nooyi. So what are the commonest qualities these visionaries have?
I think, number one, I've been very fortunate to talk to many people, like Mr. Tata, Indra Nooyi, John Chambers, Uday Kotak, Prem Watsa, Ashok Soota in the domestic market space, and many more as such. And one common stream is very simple, that everybody is exceptional. So this is a very two-sided coin now. Everybody is exceptional, but underlying thesis, they're all very humble. They're all absolutely devoted to what they believe in, and they've executed well. They're leaders par excellence of people, and they're selfless. That matters a lot. They're fundamentally out to achieve something which has never been done before. And I find that common because I find that in entrepreneurs, which we interact with today also. Whether it's a Piyush Bansal, Subham Maheshwari, Mukesh Bansal, Ankit Nagori, Sneh from Miko, or a young entrepreneur and his wife, Arjun and Vaishali from KB Coal in the climate space, or minus zero founders who want to beat Tesla in their own market. It's audacious. And I think every one of the people I've met, which is in the Vision series on our website, they're audacious. And so are the entrepreneurs. There is commonality there.
And would there be a distinction between mainstream startup and purpose-led climate tech or health tech or agri-tech entrepreneurs?
Look, I think the traditional definition is there is impact-based startups. My belief has been and continues to be that risk capital itself, right, creates impact in the market. And some startups, like Piyush Bansal, when we invested, wanted to change and correct the myopia which existed in large populations like India. So that was his vision, and his company's direction, the product strategy, the technology, the pricing, went in creating a large company which today manufactures 50 odd million glasses in 12 years with that vision. And that vision is with other people also, which I have seen, whether it is, First Cry or other thing. But they all start with a passion to change the world. And subsequently, there is impact. There is impact on employment because they're getting larger. There is impact on efficiencies because they're using technology. There is impact on scale. What took 25, 30 years for a company to scale to, today it can be done in 10 to 12 years. So every element of building a company is being innovated by these young entrepreneurs. Every one of them has an impact. Now, what we did is about 6 years back, we started measuring the impact. And we actually take out an annual report on impact. So today, organization like Cropin is and even Agrostar is having an impact in increasing the efficiency of farmland through technology. Okay, very tough in India because the average farmland is 500,000. So in our case, what happened? We started measuring it, and we found that every entrepreneur was doing it anyway, but they were not thinking about the fact that this was impact. Traditional impact is, let's start from the bottom of the pyramid, but our impact is in manufacturing, design, in product, in efficiencies, in SOPs for improving production. That's all significant impact. And if you see our annual report, you'll find out.
What's the outlook for VC market and PE market in 2025?
I'm extremely positive. Okay. I think the outlook, I would like to not say 1 year. I would like to say in last 5 years what has happened, in the next 5 years what I think will happen. Then the blocks fall every year. Whether there's a plus minus 10%, it really doesn't matter overall. If I look at just the capital which has been deployed in the last, I think 5 years, it's about $300 million, and capital return is $200 million. I believe in the next 5 years till 2030. India will deploy anywhere between $500 to $600 million worth of risk capital, both private equity and VC. And there is no question that this will happen. And exits will be higher. So to that extent, I think there's a growth market which is available, which is very, very clear. But it's now become extremely savvy from a risk capital deployment perspective, who they fund. So companies are growing larger. Companies are going better, more usage of technology, more usage of not proprietary technology, but as India has demonstrated through the UPI platform, that there is digital public infrastructure, which is going to be actually removing the inefficiencies of a proprietary proprietary platform and enable more entrepreneurs to come in where the basics have been taken by the digital public infrastructure. That's happening in the healthcare space after payments. That's happening in lending now. And you'll find it happening in every single area. So I'm very bullish in terms of technology entrepreneurs changing the world, growing bigger, and innovative technologies coming from India which did not exist before. In our own portfolio, we have at least 20 companies, right, who have deep tech, or what I call extreme tech, right? Such technologies do not exist anywhere in the world. And I think that's going to happen more and more. Minus Zero is a good example. Kavli is a good example in automotive. Miko is a good example. If you look at Chemical, that's a good example. Aether in upper limb robotic arms is a good example. And the list goes on.
And what would be your observations for the climate tech industry in 2025?
I think climate tech, in my view, broadly speaking, there's a lot to do. I also believe that what as a society we do is incremental in nature. It really, I mean, while I think it's a good idea to save plastic and ban plastic bags, it really doesn't have major impact in a long-term basis. Not because it's bad to do. I think it's just that there are ways other people find a way to do the needful. When we talk about the whole climate tech area, we have been looking at how to get technology so that the impact over a period of time becomes larger. Chemical is a very good example. Minus Zero is a very good example. Chemical is a company which extracts color out of bacteria. And in textile area, if you take a jean, it takes 5,000 to 6,000 liters of water in indigo color gene to make. Now, if that can be reduced by half through a technology, okay, it is a very, very powerful thing. KB coal, which is extracting color out of bacteria, there are 14 colors on their palette right now. They've just signed the first contract to supply color to a global fashion player, okay, is one very good such example. Now, how do we scale that is something which will happen. We also find that there is obviously a cost benefit which has to be done. The whole minus zero area, their technology to have autonomous vehicles on Indian roads, okay, and technology touted to be better than what Tesla has is something very interesting. They've signed up with a few OEMs to produce that on a POC basis. So I think such in the whole electric space, in the whole space of batteries, in the whole battery is not one-sided coin. You don't use batteries and say you've saved carbon, because that same battery has to be refurbished, and it's probably lying in garbage dumps right now overall. So I think we've taken a slightly different approach where technology usage is going to be very high. We found a very few companies so far. We're not traditional high capital. We don't build with the entrepreneur waste processing plants. That's not where we are, right? Near Bangalore, I think they've just inaugurated one waste processing plant. I believe 9 or 10 more are required to take the garbage from Bangalore. That's a very big problem. Okay. That's something which we are not into. We are into usage of technology for climate change, like water usage in textile so far.
What are the attributes that guide your funding decisions?
Our attributes are very simple. We do early stage. The quality of the entrepreneur is absolutely important. The quality of the entrepreneur from his vision, his ability to execute, his ability to hire people which are better than him, delegate, the product market fit. Is there a large TAM which is there? Is there a company similar to that? I mean, if there's a company similar to that, we probably will step back, because then it's not a unique proposition in the market. The incidence of usage of technology is going to be very high. It's either technology enabled or deep tech company. So I think these are the combinations which are there. We invest in the seed stage and Series A stage predominantly. In seed stage, some of our companies have done very well. It's a high risk area. So we allocate 10% of our capital into the seed stage and about 65% of our capital predominantly into Series A, maybe a little bit on B. That's our strategy for investing.
And anything particularly you look in at an individual level from entrepreneurs? At an individual
It's
level?
just, it's just passion. It's just, I'll give you an example. Um, when we met the founders of Minus Zero, it was just so apparent that they had been very frugal in bringing the testing of autonomous vehicles in a city called Patiala on autos, three-wheelers. Okay. And they had bootstrapped to that level where the technology was functional, but obviously not in a nice manner, right? It had to be packaged well. And we found that it is unique. It is nobody in India is able to do that. And these guys they're basically two youngsters, I think they're cousins. And we said, okay, that's a good area to bet on. Unique, not to be found in India, perhaps in the world. The same thing happened with on a lesser technology enabled, but with first cry lens cart with Mukesh at Curefit. Each one of them had something which was very, very unique, very unique. At an individual level, we look for passion, we look for hunger, we look for vision, we look for audaciousness, we look for uniqueness of the product market fit, amongst other things, and a high degree
Finally,
of integrity.
finally, what are the life lessons that you have learned which you think would be useful for would-be entrepreneurs, which you would like to share?
Well, I think first, as a lesson as a VC is very simple. I think we assume that because we have capital, we have the right to sit on the board of companies. I keep saying to my colleagues and anybody who I meet, as an investor, you come on the board of a company because you have capital. But on day one, you have to start proving that you're worthy of sitting on that board. Learn deep about the company, learn about what's going to happen, how you can help the company. It is very, very important. Take some time. Okay. Secondly, we are not the entrepreneur. The entrepreneur is the entrepreneur. Don't cross that line. I have crossed that line many times where I thought I could do better and I used to suggest things. That was a disaster, right? So third thing is just be humble about it. I think, we call ourselves a venturepreneur, a venture fund who's built by entrepreneurs. And there is no difference between an entrepreneur and investors like us. The qualities are the same, risks are the same. By the way, entrepreneurs have one thing common: they are able to take high risk. They are able to think about changing something which has never been done before. High risk is very important because how do you create a product which has never been done before? And they are seeking capital for that. So the ability to stay and take risk is very, very important. We are not looking for safe entrepreneurs in technology.
So, what is the status of Indian capital coming into the market or vis-a-vis the global capital actually?
I think the Indian capital has probably about 15% of total private equity VC capital right now, around that. And it has to increase. The regulatory hurdles are broadly not there right now, but we believe that in the next 5 years it'll go up to 20-25%. And whatever should be done, there are many things which can be done. I think it's very critical for the venture capital and risk capital to succeed in India. Indian capital is a must. I'm looking forward to the day when, like the stock markets, half the capital comes from Indian family offices and corporates and government funds, whereas half capital comes from outside India. That ratio has to tilt very fast. By the way, for us as a fund, we manage about $1.3 billion. 50% has come from India. So about 5,000 crores has come from India. So it is a proxy to what perhaps others can do when the environment is right.
And we also have seen of late lots of philanthropic money coming into the market. Any observations you have there?
No, I think philanthropic money is very important. All of us are, privileged people. We have the privilege of a lifestyle which perhaps many of our countrymen don't have. And I think it's very important to go into philanthropy, which is repetitive in terms of one time. And that means you have to make sure that you're teaching somebody to fish and not giving fish as such. I think every single investor and entrepreneur I know, in their own way, they're doing giving back to society, which is a very encouraging sign.
Right. So thanks a lot. It has been wonderful talking to you and getting a sense of how the VC world is shaping up, how the startups are doing wonderfully in India.
Thank you.
We hope you like this program. This program is also live streamed on All India Radio and aired on community radio stations. We look forward to your feedback on our WhatsApp number 9818120554. For participation in this program, write to us at sustainability.karma@gmail.com. You may also connect with us on social media. This podcast is also available on podcast hosting sites. Looking forward to meet you again at the same time next week with a new episode and a new guest. Till then, goodbye from all of us. Sustainability Karma, a podcast series on sustainable development, sustainability and ESG.